Hello, thank you for tuning in. In this video, we'll be talking about this income statement. Okay, so we'll be creating a fictitious company, namely ABC Corp, and we'll be creating a financial statement, the income statement for this company. So let's start by naming. The first line is where the company's name gets written down, the ABC Corp. And after that, we get to write that it is the income statement. Right, there is income statement, balance sheet, and a lot of other things. So let us make it clear and write down income statement. And below that, we usually see the year ended in December 31st. So this income statement is showing the past performance, the last fiscal year. So the last 1 year's performance, last 1 year's income is written down here in the multiples of millions. So if I put 1 down, it's actually 1 million. Okay, so let us begin. First, let us write down sales 2018, and usually you'll see on the right side 2017 and 2016 sometimes, and 2015 as well. For now, I'm just going to fill 2018. So we start with net sales or net revenue, both of the same things. Depends upon the company what they want to write. So let's say the net sales of 2018 was 200 million. And the cost of acquiring that sale is about, let's say, the cost of acquiring the sale is about, let us keep it 100 million. That's cool. So if you subtract that, you see, okay, you get 100 million left. So what is that? That is called the gross profit. The gross profit is 100 million here. So this is the income that we get from sales. Net sales minus the cost of sales, the gross profit there is 100 million. And we still have to keep on going down. So right now, we'll be seeing something called the operating expenses. The expenses that arise from day-to-day operating activities for the past year, of course. So, operating expenses. Operating expenses, the first one, let us write research and development, right? Usually companies will write the biggest expense, and the smallest expenses will be written other expenses. They won't specifically mention those. So let's say research and development is one of the expenses, R&D for short. So the research expenses, it came about minus 20 million, so we put a minus there. And we have administration, general administration stuff, minus 10, right? Paying staff, salaries, and other. So the other stuff comes there as minus 2. So it can be anything from marketing expense to rent expense to a lot of other expenses, but not interest expense because that comes down separately. They're not operating expenses. Now we calculate the total. So let's just make down a total. Minus 20, minus 10, minus 2 equals to minus $32 million in total expenses that arises from operating expenses. Cool. So now what we should do is calculate the income left for the corporation, for the ABC Corp. So what we do is the 100 million that we have minus the 32 is what we left for this line. So the operating income is the income that is left after operating activities, which is 68 million. Okay, cool. So what's next? So we put other income and expenses. As I said, if the income and expenses of certain activities, there are a lot of small activities that add up together and give us minus 3. If we just include everything, it's going to be a very long list. So that is why we put that. Right now, I'm writing out EBIT, earnings before interest and taxes, for 2018 and 2017. So let us just write down for 2018. For 2018, so 68 minus 3 is $65 million. Okay, so it is earnings before interest and taxes. Now let us just minus the interest expense or interest income that we get. Okay, interest expenses, if we borrow too much, it'll be an expense. If we have lended too much to other people, will be a net of income. So we're going to calculate the interest expense. So let us say for this company we had an expense of minus 5 million. What happens is that now we write the earnings before taxes. So the income before taxes, earnings before taxes, both are the same thing. As I said before, all of the things depends upon the company. So 65 minus 5 is $60 million. So what can we do now? So let us just reduce the tax. So let us say we're in a country where we are getting taxed about 50%. So what is 50% of 60? It is going to be $30 million. Okay, let me just change the percentage. Okay, 50%. Yes, that is a lot of percentage. So the rest, after paying tax, the rest we have is called the net income, and this is the bottom line of the income statement. The net income right now is 60 minus 30 million. We have 30 million left. Usually this is the bottom line. Sometimes we have another thing down as well. We'll look at it right briefly now. So let me just write down 30 million. Okay, so 30 million. Now we have something called the earnings per share. Some corporations like to label that specifically. So the earnings per share is basically the net income divided by the total number of outstanding shares. Now the diluted earnings per share is, or if it exists, it's usually less than the earnings per share, which is net income divided by any outstanding shares, but it has increased right now. So let us go to the SEC and figure out a way to find the income statement for Apple Corporation. So you go that URL and let us write Apple. Cool. Fast search. So right now, let us go and search down. Let us go down on the filings tab. And let us search for the 10K. So let us pick this 10K and let us pick that 10K and open up. So here it is. Form 10K. Awesome. So we're going down and finding the financial statements and supplementary data. Cool. So let us find for income statement. So they have it named differently here, but most of the things are similar. So we have different years. Cool. Right. So let us try to compare what we've written here and let's see what is the difference. Okay, so net sales. Okay, cost of sales. We have net sales and cost of sales and gross profit and gross margin. They've written it. Now operating expenses, R&D. We've just wrote admin and other expenses. Now they've got total expenses, operating expenses as well. Okay, cool. And below that we have operating income and other income or expenses. Okay, we're good so far. Okay. And because certain companies have certain sources of income than compared to other companies, so we will be missing out some things, right? Okay, so let's see, EBIT, earnings before interest and taxes. They've named it differently. Okay. And interest expense. Okay. I don't think they've labeled here interest expense, income before provision for income taxes. And we have, that is the income before tax. And finally, provision for income taxes is the tax payable. Okay. And the net income is net income. Glad that is the same. So earnings per share, basic and diluted, is EPS and diluted EPS. As you see a little bit before down in the web page, you can see the amount of outstanding shares has increased for diluted. And that is why always the diluted EPS is lesser than the EPS. So thank you for watching this video. If you really learned something from the real world example, I'm really happy. Please feel free to subscribe. Thank you. See you later.